So on the economics front, where I spend most of my time, where I think your viewers are concerned, I think the administration is very concerned about helping out workers and helping out the environment and the economy, and I do think that is important right now. I think they understand that in shutting down the economy and having people stay at home, we're really asking people to sacrifice, and we're asking people to give up their occupation and give up their wages, and they do understand the impact of that, and they're trying to understand how to mitigate that, and that is really important.
When it comes to the potential for bailouts, Gary, Boeing has been talked about a lot on our air this week, so it's quite a good one to focus on. Some of the predicament that the company is facing has been its own doing and its own wrongdoing. Should that be factored in when considering whether these types of companies should receive a bailout?
Well, I think we need to talk about it in the big picture. It's easier to talk about it in the big picture than specific companies, because I think right now we've got a big issue on our hands. We need to bail out American workers right now. You know, American workers that want to work and want to go to work if they could are unable to and are being told to stay home and are being told not to work. And we also have industries that are really crucial for our economy. You know, in your last hour, the segment on the casino industry was fascinating, how many billions of dollars of salaries they pay and how many millions of people they employ. We need to have industries like that, and we need them to survive. And the casino industry, it doesn't stand by itself. It's dependent upon the airline industry. It's dependent on Uber and Lyft to get people there. It's dependent on a lot of different industries. So when we're talking about bailing out industries, we're really talking about the American worker today. And I think that's the important issue. And I think that's what Washington is trying to deal with right now. Are there specific issues in specific companies? Yeah, there are. But the holistic issue that really Congress is spending their time on right now is dealing with American workers and American workers' inability to work and put food on their table and pay for their basic expenses right now.
Gary, I wanted to ask a little bit about the banks. It's, of course, an area you know unbelievably well. There's been a number of announcements over the course of the week in the way that they're helping existing customers, essentially cutting them some slack, whether we're talking about small businesses or consumers. Should the banks, though, be going further than that and extending loans to companies that might be struggling that aren't existing clients? Or is that an unreasonable expectation, and does that need some kind of government backing of loans to expect the banks to get to that point?
So I think the banks have acted quite appropriately so far in working with their clients and making sure those that are not making payments on whether it be mortgages or credit cards or any type of loans that are out there, the banks are working with them. You've had a lot of the different bank CEOs on talking about how they're working with their clients. Yes, banks need to work with the entire U.S. consumer industry and other industries to help them through this situation. But we don't want to turn one crisis into a new crisis and invent a new crisis that we have to solve. So I would say that banks themselves are part of the solution, but they have to manage their own solvency as they go through this. And them just making loans for the sake of making loans, at the end of the day, won't help anyone, and then we'll have another crisis to solve.
The banks, Gary, as you well know, all suspended, or the big banks all suspended their buybacks on Sunday. The following day, they all announced that they'd be tapping the Fed's discount window. What do you make of that? Do you think it's in any way a sign of weakness?
Absolutely not. They were asked to tap the discount window. Historically, no one would tap the discount window. No one wanted to tap the discount window. Many banks were asked. They did it together. Many of the reasons that banks are tapping the discount window right now, and this is a longer discussion, has to do with a lot of the regulation that was put in place after the 2008 financial crisis. You know, banks operate under in
markets has been that the U.S. Treasury market, the commercial paper market haven't been functioning as well as we would typically like to see, and that there's been this big rush for US dollar liquidity. And yet, at the same time, everyone frames this as not being a financial crisis. Is that framing still fair when we have such clear dysfunctions at the moment in certain parts of financial markets?
Wilbur, I think people are saying it's not a banking crisis. Our banks are highly capitalized and functioning well. Is there a deleveraging of the market? There's a complete deleveraging of the market. Is there a flight to liquidity? Yes, there's a flight to liquidity. Do people want to own dollars? Yes, people want to own dollars. When everything correlates to one, which is going on right now, which always happens in times of stress. It happened in 01, it happened in 08, it's happening now. And everyone wants to create liquidity and wants to own dollars because they're the safest currency in the world. Banks are trying to facilitate that and stay within their very, very stringent regulatory guidelines that were put upon them after the 2008 financial crisis. That's the scenario that's going on right now. And they're using the various facilities that the government has put in place to help them out. I do believe, and I think this is a big issue, one of the major issues that we're going to need to solve before markets can substantially rally is the whole credit market issue, the muni issue. What is the Treasury going to issue to pay for all of the things going through Congress right now? You know, a lot of what's going through Congress is trillions of dollars, and the federal government is going to need to borrow that money, and we're going to need to know how they're going to pay for that. And as you very well know, markets do not like unpredictability. They like to know what's coming down the pipe. They like to know how the government's going to pay for it. And until we get the Treasury to declare how they're going to pay for it, until we get the credit markets functioning, in a much more reasonable fashion, I think we're going to continue to see a lot of this volatility.
So, Gary, I mean, you've been upbeat. It's Sarah. You've told me before not to be too negative during the last stock market correction. You said we're not in recession. How much is your optimism being tested right now? And when you think about the magnitude of the economic losses we are looking at, how do you even wrap your head around the size and scope of it?
Well, Sarah, we're in recession. I'm not going to tell you that we're not in recession right now. You cannot remove the consumer from the U.S. economy, and we're an 80% consumer-driven GDP, and say that we're not in recession, and the unemployment number is going to skyrocket. Yes, they're going to skyrocket. One of my hopes is a lot of the packages that are coming through Congress right now will allow industry to keep their employees on their books and continue to pay them. That's the package that Congress should be working on. If you look at the Collins-Rubio piece of the stimulus package, which is I think about $300 billion for small companies, that's completely aimed at allowing small companies below 500 employees, to continue to pay their employees, and those loans will be forgiven if employers continue to do that. That's what we need to do. We need to continue to have companies pay their employees as companies are not able to earn. So, we really have to figure out how to get to the other side of this.
Would you be buying stocks right now? Are you buying stocks right now?
So the answer is I have been. I have been. I think cash flow analysis is really important between now and year end, and understanding a company's balance sheet is important. If you look at a company, and look, I don't really talk single stocks, but I'll mention one. You look at a company like Uber that came out yesterday and said, look, we have enough cash to make it till year end. The stock went up from $14, $15 to $23 at the high today. So I think it's important to do your balance sheet work. It's important to understand the cash flow analysis. And I do believe, like everyone, that we will come out of this and we'll come out strong, and the consumer will once again consume in this country. So in some respects, it's can companies make it to the other side?
And do you really think the government can prevent mass layoffs in this country?
They can try. They can clearly try, and I give them enormous credit for what they're trying to do and understanding the breadth, depth, and magnitude of the problem. They're clearly trying to throw as many resources at this as they can. I was on another network a week ago, and I said to the anchor, I said, this is not a small problem. This is $1 trillion plus problem, and this is a $1 trillion plus problem. And I think the government's starting to understand the magnitude of how important the consumer is to our economy. So they're doing what they can, and I think they've got the attitude that they're going to have to continue to do more and more until we get to the other side.
It looks like Kevin Hassett is going back to the administration to help deal with all of this. You were on that team. Would you go back if you were called?
Look, I want to be, and I continue to be as helpful as I can. I continue to be in touch with many of my former colleagues in the White House and many of the other agencies. And if they need my help, I am willing to help the country in any way I can.
Gary Cohn, thank you for joining us.